welcome to the FT headquarters for the latest PWM interview on the investment outlook for 2020. Today I have with me Florent Bronès, Chief Investment Officer for BNP Paribas Wealth Management. Welcome, Florent.
Hello.
Florent, stock valuations have reached historical highs and markets have continued to rally. Do you think is it too late for investors to add risk to their portfolios today?
Short answer, no, it's not too late. The valuation of equities are richer today compared to 1 year ago because, in fact, we had a 25% rise in the world equity indices, despite the fact that earnings were flat. So the valuation deteriorates clearly. However, with an historical perspective, today's stock market are 20-25% higher than long-term average in absolute terms, so in terms of PE or in terms of price to cash flow. But interest rates are much lower than they were in the past. So relative to interest rates, equities are still cheap compared to history.
Mm-hmm. And do you think that fundamentals this year or for the next foreseeable future are going to play a greater role compared to the past? You know, we've seen perhaps the decline in geopolitical risk, but what do you think is the role of fundamentals?
For sure. The geopolitical risk shrunk last year, especially due to the less tensions between the US and China. The Phase 1 deal was a positive for our equity on that point. However, fundamentals were positive last year, and we think they will continue to be positive. By positive fundamental, I mean that the momentum of the economic growth remained positive. It means that, yes, we have a recession in the manufacturing part of the global economy. This is due to the tensions between China and the US. This is also due to the automobile sector, which is adjusting to several specific problems. But the global growth is supported by consumption and the service sector. Services are still going up, they are still strong, and they will continue to be strong as long as the job creation process will be underway. So we have to watch the employment figures in the US, but also in Germany or Japan, where they continue to be positive.
And what does it mean in terms of expectations for stock markets?
It means that the corporate sector will continue to deliver earnings growth. And that's the basic fundamental factor behind the rise in equity prices over the long run, rising cash flows of corporations. Because if the cash flows increase, companies can do a lot of things. They can continue to invest, they can continue to spend in R&D, they can increase dividend, buy back shares, etc. So the most important fundamental factor is we continue to have growth and growth in the cash flows delivered by the corporate sector.
You mentioned the very low yield environment. Are there valid alternatives today to fixed income that can satisfy investors' hunger for yield?
Well, in the fixed income universe, it will be very difficult to get decent returns, especially in terms of real returns. So excluding inflation, returns in the fixed income universe will continue to be poor. And this is one of the reasons why we think that TINA, there is no alternative, this famous factor, will continue to put money into equities, and we will continue to see capital flows into risky assets in general, meaning that the alternative to fixed income are more risky assets with longer duration, more risk, but we need to have a long-term perspective.
So investors are adding risk to their portfolios, but there are so many potential tail risks coming from. So, for example, we know we've heard about the outbreak of the coronavirus in China, or potential climate change disasters that are happening more frequently. So how can investors protect their portfolios in the case of a potential economic downturn or increased volatility?
Well, there is no way to escape risk in general. If you increase the weighting of risky assets in your portfolio, risk exists and we have to face it. The only way is to lower the volatility of your portfolio by diversification. Diversification in terms of assets, diversification in terms of geography, in terms of currencies, in terms of themes. So we clearly advise our client to take more risk for the long term, but to diversify.
With regards to long-term themes, which one would you say is most promising to you, looks most promising to you, and perhaps can appeal or strike a chord with investors that are more aware of the sustainable challenges that we all face?
Socially responsible investment, so SRI investment, is a long-term trend, and it's impossible to escape it. And all our clients are very well aware of that phenomenon. We advise to play through equity markets with an SRI mind. It means that the time investment themes that we are pushing for 2020 will always have a version with SRI products. We have done a study on that, and we think that despite positive views or negative views on social investing, in fact, it's not changing the relationship between risk and return. It's a neutral factor over the long run. But for the planet and for the feel-good factor, it is extremely positive. So we think even if we increase the weighting of risky assets in our portfolio, we can do that, we will do that through socially responsible investments.
Is there any one theme that you would like to highlight?
If you want me to mention just one, I'm thinking about waste management and water management. That will be a key item for the development of the planet over the long run. Green energy also is part of it. So clearly something not very exciting at the first when you think of it, but longer term, it will be a driving force for those sectors.
Thank you very much for joining me, Florent.
Thank you to you.